Well, the April jobs report is due out in just over 2 hours. It is expected to show the highest unemployment rate since the Great Depression. Joining us right now to talk about what to expect is Michelle Girard. She's chief U.S. economist at NatWest Markets. Also, Beth Akers, who's senior fellow at the Manhattan Institute. And it's good to see both of you this morning. Kind of hard to believe that the market has indicated up pretty sharply just before 2.5 hours before we are anticipating a number that will show 21.5 million Americans lost their jobs in the month of April. Beth, what do you think's happening? Why have we already baked all of this in? What is the market anticipating at this point?
Yeah, exactly. So we're expecting, markets are always moving on surprises, right? And so this has been a long time coming. We've been looking forward to this scary number for over a month now since we saw the economy close down in March. So I think people just have in their mind that this is going to happen and are prepared for it, at least to the extent that they can.
Yeah, Beth, you said the market's always trading on surprises. What would be a surprise? Is there anything that could come as a surprise in this number today? It's hard to imagine.
I think that would be difficult. And I think the expectations that we have about what's going to happen today are just this tremendously huge number. And there's a lot of variability about what that could be, just because it's very challenging to estimate in this uncertain and unprecedented time. So, I think it's going to be challenging to actually surprise the markets today.
Michelle, let's talk a little bit about this number and how long you expect these job losses to last, because I think that's the biggest question for the market at this point.
No, I agree with you. And so whatever the headline print is, whatever the unemployment rate jumps to, I actually think we'll be digging into the report to see what we can glean about how long these numbers may stay, may stay so bad. So, for example, we're expecting this big jump in the unemployment rate to 60%, 20%. But within those statistics, we can get a sense of how many of those unemployed are expecting to be called back to work within 6 months. And in March, a quarter of those unemployed expected to be called back within 6 months. That was a real spike. Those are numbers you hadn't seen except for kind of like in the late 1970s, early 80s recession. And when you saw that happen, when the unemployment rate is obviously dominated by unemployed, short-term unemployed, it tends to fall back fairly quickly, not to where it was, but it comes off of its peak. So evidence like that we can glean from any of the underlying data about how sustainable these numbers are going to be at these awful levels, I think is what, us economists will be most focused on.
Michelle, that's a pretty important number, and I don't recall that being a number that we've ever talked about in all the years that I've been watching the monthly jobs numbers on that. Where is it in the report? Is it something that we'll be able to see instantaneously?
It may not be instantaneous because, as you said, it's not a number that we've gotten used to looking at. But it is within the household survey data. So the report that we get, not the payroll numbers that we tend to focus on, but where the unemployment rate comes from. They do break down unemployment. They look at, is it part-time or full-time? Is it by duration of unemployment? And in terms of the classifications, there's a lot of reasons for unemployment. Are you on temporary layoff? Are you employed but not working for other reasons? These are some of the insights that we can gain from the underlying data within the household survey. And we paid a lot of attention to that in March. The BLS they put out a separate note about how a lot of these job losses were classified. And I think we'll need a lot of additional information beyond the headlines in that kind of commentary.
So if a quarter of those people for the month of March expected to get called back within 6 months, it would be good news if that number increased, I would say, or bad news maybe if it dropped off a cliff.
Well, I think what will end up happening is that, of course, the unemployment rate's going to go up, and the share, that share, even if it's 25 or even if the share is the same, that's an important proportion, to see that a quarter of the people have an indication from their employers that they will be called back. So, kind of keeping an eye on that. Again, even if it doesn't move, it'll give us some insight into the composition of that, of this really high, staggeringly high unemployment number.